Hello, welcome to the Excel problem for week 7 and for chapter 6. The Excel problem is ATC 6-9 on page 357. Now, part of the reason that I picked this, even though I picked it way back in the summer when I was developing the class, but I selected this problem because all the information is given to you in the textbook. All you have to do, now I say all you have to do, you just have to make Excel work right. So when you actually open up your sheet in the classroom for your solution, it'll be a blank sheet. And it'll be up to you then to begin to make it look like what this should look like. So I have the solution here in front of you, and we're going to build this together. But as we build it together, pardon me, as we build it together, well, there will be some features that I will go over with you so that you can see them and see how they work. So let's look up here and look at beginning to write this. If we were looking at this, here's A and here's 1, so there's the A1. I have this on 170%, so I'm hoping that you can see enough detail to really be helpful to you. This says classified balance sheet, and that's what it says in the book. To get there, I look at home, and I have this centered. For this to be centered, I have it on bold so that this will be bold, and then I just simply type in classified balance sheet. Just spell it out just as it was there. Now when I do that, I'm going to have to open this up a little bit wider. As I look down here, I can see things like total plant, property, and equipment is quite long. So actually we will build column A first. That's how we would go about building this. Next we have A2, and we have assets. And if you look at under the home tab, assets are on bold and they're on underline. So, and they're on center. So those are the three functions we have working here. We have bold, underline, and center, and we simply type assets. We skip the next line, and then we come to A4. Now A4 is flush to the left-hand margin, so we don't have anything, any indent there for that one. And whoops, I jumped around there, didn't mean to. So we have here on home, we have bold, because this is in bold, and we have this on the left-hand margin, and then we just type in current assets. And then next we have cash, and if you'll look here, you'll just see that this is appearing just exactly as it's in the book, and so you just keep typing accounts receivable, inventory. Now as you're typing this, you're going to be drifting over into the B column. Don't worry about that. Just keep typing till you have all the information for the A column in there. So inventory comes next, and then total current assets, and none of those are on bold. All of those, the bold's not on, and so the left-hand margin's on, but that's all. And then we have plant, property, and equipment. Now that is bold, and that's going to be even longer than some of our other lines. So when we look at home tab, we'll see home tab has the bold on, and it has the left hand on, and you're just going to type property, comma, plant, and equipment, and all of that will go on the line. It'll drift way over into B. Don't worry about that when you're building it. So next will come land, and then building, and then total plant, property, and equipment. And then you skip a line, and then you write total assets. So you just keep building this A column, and then you skip a line, and then you have liabilities. And if you look at the liabilities and you click on the Home tab, you'll notice that it's bold, it's underlined, and it's centered. So bold, underlined, and centered for liabilities. And then current liabilities in the next on the next row, they're just going to be bold and flush to the left-hand margin. And then the liabilities you have are wages payable, accounts payable and wages payable, and total current liabilities. And then you have 22 is blank, and then you have a bold for long-term liabilities. If we open the Home tab on the toolbar, you'll see that the bold is turned on here. And then notes payable, and then a blank line, and then total liabilities. So I'm going to pull those up so you can begin to see them. They need to be up higher for you to see. So here's the liabilities, current, long-term. They look just exactly like the book. You absolutely mimic exactly what the book has, and try and build the A column first. And so then total liabilities, a blank. Now here's stockholders equity. If we look at the Home tab again, it will have bold, it will have underline, and it will be centered. But then contribute common stock, retained earnings. Those are the two accounts that are open. And then total stockholders equity, a blank line, retained earnings, a blank line, blank row, total stockholders equity, a blank row, total liabilities and stockholders equity, and then a blank. Now yours, I'm going to take this, yours probably looks something like that, with all of these not showing all the way and some showing through and some others showing through. This is a time when after those are all typed in and all your names are in there, you want to come up here with this crosshairs, this black crosshairs between the A and the B line, and you want to double click. When you double click, it'll open that up just as wide as you need it to be. So you'll want to go up there and double click, and it'll open it up just as wide as you will need it to be. Now you're going to be comparing two companies, Bainbridge and Christ. So when we look here, we've got Bainbridge and Christ, and the instruction number 1 says required, set up the preceding spreadsheet, complete the balance sheet and income statement, use Excel formulas for rows that total on the balance sheet and for gross margin and for net income on the income statement. So our first task is just to get all these numbers down on the page except for the ratios. So we're going to want to get this balance sheet and this income statement built, and then we'll look at those ratios. So Bainbridge is in this column. Now I know that it's going to look something like that, and you're going to have to, yours won't have the, you don't want to do that. See what happens when you double click, because something down below is really big. So I just want to open this up enough to get Bainbridge looking kind of nice in there. So I'm going to type Bainbridge in here. Again, it's bold and centered. Christ is bold and centered. And then I'm going to build the numbers. So the numbers are right here in a row, and they're 18,000 and 19,000 and 14,000 and 51,000. On all of these, you're going to come up here to Home. You're going to come over to Format. You're going to come down to Format Cells. And when that menu comes up, you're going to want it to be on numbers. You're going to want no digits. And I think you're not going to have any negatives, but you want the black parentheses for the negatives. Now to do that, of course, you'll have to do all the rows. So this actually looks like they might have put that one in using the comment right here. Nope, they didn't, because that forces you to take the pennies and the tens. You don't want any cents in this at all. So here you go. You'll want to, yours won't be pre-formatted like mine is. So it's Home, Format over here under Cells, right over here, and then click on Format and come down to Format Cells at the very bottom. It's the last command. And then you're going to want to make sure that your decimal points are turned off, and you're going to want to make sure that you have your parentheses for the negatives. And then you're going to click OK. So then you'll put all of these that way. So you'll drag all of this down. You want all of these to look just alike. So all the places right down to total liabilities and stockholders' equities, you can format all of those. Another thing you at the same time. And so that's what you should do. And then you just enter all of these numbers. So then you have 52,500 for land, 135,000 for building. You can see those right in the book. 187.50 is the total of those. Now, what they were telling you before is when you put these numbers in, you can put those in because they're coming straight out of the book. But when you get to this total, you want to use home and sum, and it'll sum those for you. Right up here, sum B5 to B7. And enter, and it'll look just like that. It'll say sum equal to sum, and then you do the same thing. You put in land, you put in building, and then you tell it to total plant, property, and equipment. So you go to home, you go to sum, and it'll show you that formula, and you say yes. So we want cell formulas in all of those. You cannot just type in the totals. So be sure that you don't do that, or you won't earn any points at all if you don't put in cell formulas. In a few minutes we're going to be using cell references. So then now for total assets, notice this formula. This formula has to be equal to, so you put in the equal sign, and it's B8 plus, so this is going to be so this one down here is going to be equal to, and it'll be B8 plus B13. So you want to click on B8, then do the plus sign, then click on B13, and then hit the enter. Hit the enter as soon as you put in B13, because if you move your mouse at all, you'll be adding extra cells in there that you don't want. So that'll give you the total assets. Now remember, it's a balance sheet, so the assets equal the liabilities plus owner's equity, so we know what this last number down here is going to be. That's going to be, they're going to equal one another. So then for current assets, you put in 20,000 for accounts payable, and you put in 15,000 for wages payable, and then you sum those. So you're going to home, sum, and then it's going to give you a box for B19 and 20, and you press enter, and it'll add those two for you. And we're going to want to see this cell, the formula that's right up here at the top. And then for notes payable, you have 75,000. So then for total liabilities, you're going to again do equals, and it's going to be B21 plus B24. You'll click on those two and you'll hit the enter, and it'll add those for you. And then common stock, put in your 30,000. For retained earnings, put in your 98.5. And then again, you'll do the sum function, home, sum, and it'll be these two added together, be 29 and 30. They stick in 31, but there's nothing in that cell. And then total liabilities and stockholders' equity is going to be equal to, and now you come up here and get the total liabilities at B26 and a plus sign, and then the total stockholders' equity right down here with a plus, and you click on that cell, and then you hit enter, and you'll see this formula, B26 plus B32, and it should also equal the assets. So then you're going to do Christ Company, because you're trying to compare, you're going to be comparing these two companies, so you need both of their balance sheets. So then for Christ Company, when we come over here, it's 22,500. So we put in the 22,500. We put in the $19,500 for accounts receivable. We put in the $18,000 for inventory. And when we get here, we want a sum. So we want to do home, sum. It'll give you the box around those three cells, and you hit enter, and it'll sum them for you. Then for land, we have $50,000. For buildings, $120,000. For total land and building, we're going to have to do the sum again of those two. So we're going to hit home, sum, the box will come up, and we'll hit enter, and it'll total those for us. And now we want total assets. So to get total assets, we have to do equal the sum of current assets plus long-term assets. So just the same as we did before, but now with these two boxes, C8 plus C13. And then enter. And you'll get their total assets. Same rule applies. This is total assets, so it's got to be the same as the total liabilities and owner's equity when I get down here. So now I'm going to put in the liabilities, and here's the total, here's the accounts payable for $52,500, wages payable for $18,000, and here's the sum of those two numbers. Again, the home bar, the sum function, the box will come up around those two cells and you hit enter. Long-term notes payable is $120,000. You put that in, and then total liabilities and owner's equity is the sum of equal to C21 plus C24. And that'll be the total liabilities. Continuing on with the stockholders' equity, you put in common stock at $9,500. You put in retained earnings at $30,000. For total stockholders' equity, again, the home tab, the sum function, and those boxes together, those cells together, C29 and C30. And then to get the total stockholders' equity, you again have to use the equal sign, and you want to equal total liabilities and plus, which is C26 plus C32, which is total stockholders' equity. So total liabilities, see how it says right here, total liabilities and stockholders' equity? Total liabilities and stockholders' equity. So we want to add together total liabilities and total stockholders' equity, those two cell formulas. Now, of course, yours will be blank because you're using a blank this time. You might have to adjust these then for with as wide as you adjusted them for the name. It looks like it'll be just fine for the numbers. If you only adjusted CRIST enough for just the CRIST, some of these numbers will be too small. You get all those number signs going across them, so you just drag this out between C and D a little bit to as wide as you want it. Now that is the balance sheet. So we're going to leave column D as a little marker column, so just grab the D and bring it over and give us a nice little narrow breaker right there for our I, and then we want multi-step income statement. So you can see here that if I look at home, this is bold and it's centered. So multi-step income statement, and you will have that they have it just slight. I'm going to make it even just a little bit wider so there's a little bit of space for your eye to see, but that's what you want there. You want to skip a line, and now an income statement starts with sales. So you can see over here that they have sales, then they have cost of goods sold, gross margin, operating expenses, net income. So we're going to type in sales, cost of goods sold, gross margin, operating expenses, net income. So that's the income statement it's asking us to produce. We're going to put Bainbridge in column F, and we're going to put CRIST in column G. And then we'll put in our numbers. So sales for Bainbridge was $500,000. Cost of goods sold was $170,000. Gross margin then has to be calculated. So it's sales minus cost of goods sold to get to gross margin. That formula is given to you quite a ways back now in these chapters. So sales minus cost of goods sold. So for here we're going to have equals F3 minus F4 to get the $330,000. Then we have the operating expenses, which are given to us at $285,000. So we have those in. And now net income is gross margin minus operating expenses. So here we're going to have F5 minus F6 to get net income. We're going to use those same formulas when we get over to CRIST. So we're going to put in the name CRIST. We're going to put in $575,000 for their sales, $200,000 for their cost of goods sold, and then we'll calculate. We want to use this equal G3 minus G4 to get G5, cost of goods sold, gross margin, I'm sorry. And then you put in your operating expenses at $345,000, and then you put in a formula for net income, and that is gross margin minus net income. So in here you're going to want that to say equal G5 minus G6 to give me the amount of net income for CRIST. If CRIST needs to be widened out some, you can do that. You can just grab this over here between G and H, get that black crosshairs, put your finger down and just slide that open, drag that open a little bit. Okay, then it's going to, yours will have all of that in there, and you're going to want to skip a couple of lines and come down to 10, and you're going to want to put in ratios. Now, when we look at the Home tab and we look at ratios, they've got the bold on and they've got the centered on. So that's how they get that look for ratios, bold and centered. Now the first one they ask for is the current ratio. And what I want to tell you is that in Appendix C at the back of the book, on page 457, you will see all the ratios and their location for the entire book. All the ratios you've learned. Appendix C can't be 457 because that's the wrong numbering. So I'm going to just open to Appendix C and see what I wrote down. It's 754. It's page 754, 755, and 756. And what you'll notice is they're by chapter. All the ratios are right there in blue in the middle, and they give you a brief explanation of them so that it's a good handy reference for you. Not all the ratios they ask for have been presented in the book, so some of them you're going to have to figure out on your own. You'll have to read the ratio and think about what's being divided by what or what's being multiplied by what. So as we look at these, we'll just start to work with them then. I'm going to move these ratios over and up a bit. And so here's the ratios that they want. And we should just type those in E. So we should type current ratio, debt to total assets rate, debt to current assets, equity to total assets, gross margin percentage, return on sales, return on assets, and return on equity. When we look at all those returns, we're thinking net income. So return is the net income that you made on those sales, the net income on using those assets, the net income on investing that equity. So as we begin to think about those, we want to write these down, and we want to think about what the ratio is. Now back here in Appendix C, the current ratio is given to us in Chapter 9. We haven't even gotten there yet. But it's current assets over current liabilities. So when I click on this box, I want to put equal. Now I have to go find current assets and current equity. So let's look carefully about where we are. We're at Bainbridge. See that up here? So then we've got to come over here to Bainbridge, and we've got to find their current assets, which are their total current assets, are right here in B8, and then their total current liabilities, which are down here in B21. So when I look over here at this equation, I've got to have equal, and I want to click on B8 and put in the divide sign, and then click on B21, and then I want to hit enter. So these should be all in formulas, no numbers in any of these ratios. They have to come from over here. So the current ratio is 1.46 if we use the current assets, B8 / divide by current liabilities, B21. Now you can do this either way you want to because you have these columns all set up. It might be easiest if you went to CRIST and did the very same equation right at the very same time, because then you're looking at these same formulas. Now remember, since you set this up with all this consistency, you could click here, look at this little black box right down here, and put that crosshairs on it and drag it over there. Excel would change the cell numbers for you, but it would keep the formula. So you can either type the formula in again, or you can merely click, use this little black square that's at the lower right hand corner, put your crosshairs on that square, and then drag it over. Now it says debt to total assets. So we're going to look over here and see if we find debt to total assets. And debt to total assets was back in chapter 3. So as we look on page 754, it says total debt divided by total assets. So when we look here at total debt, we're going to be looking at total liabilities. So when we look at total debt for Bainbridge, I had to look and see which one I was looking at there. The total liabilities are in B26. It says B26 right up here. I just clicked on B26, and that's exactly where it was. So it's B26 for the total liabilities, the total debt, the / for the divide, and then the total assets. And the total assets are right here in B15. So if you just read carefully the titles, look for that number, and do what the math says in these ratio statements, you'll be just fine. So total assets to debt to total assets, again, you can just put that in there and then drag it across, and you'll get that information for CRIST. And then equity to total assets. So equity is down here. And so here's total stockholders equity. And if we look up here at equity, it says it's going to be B32. And here is B32, total stockholders equity of CRIST to total assets. So there's equity to total assets right here. There's total assets. So this third calculation is going to be B32 divide by B15. Total equity divide by total assets. Then the gross margin percentage. Now the gross margin percentage is gross margin divide by net sales. So if we look at 754, gross margin divide by net sales. So we can see that gross margin is right up here in F5, and so gross margin F5 divide by total sales right there in F3. So gross margin is gross margin F5 backslash divide by F3. And that will give us the gross margin percentage. The other thing you can do, of course, is again drag that calculation across, and Excel will change it for you exactly for the CRIST numbers. Or you can put them in if you want to. It doesn't matter. Just be sure you have only cell formulas in here and no numbers. So now return on sales. So return on sales is going to be net income, and net income is right here in F7. So F7 divide by sales, F3. So when we look at return, net income, F7 divide by F3, the sales that we made, and we get the return on sales percentage. And then we can drag that over and have it for both companies. And then here is the return on assets. Again, return on assets is going to be net income, so it's going to be F7, but now it's going to be on assets. So now we're in the Bainbridge company, and the assets are here in B, so it's going to be net income divide, which is F7 divide backslash divide by B15, and then you'll get this 18.87. Now we'll format these in a minute. We don't have to format them right now. You may be getting huge numbers in there. I don't know just what you're getting until we format it. And then return on equity. So that's going to be net income divided by equity. Notice how sales, assets, and equity gives you the return on assets, equity, and your other source of cash, which is sales. So as you look at these, now we do borrow money from time to time, but we right now are using these three major indicators. Again, on all of these, you can just click here in that lower right hand corner and drag that formula across, and it'll fill in. Now the next thing we need to do is to format these cells correctly. So these first two cells, we want to come up to home. We want to go to format, format cells. We want 2 decimal points in here. So be sure you have 2 decimal points, and we want it to be a number. So we want it to be a number. We want it to have 2 decimal points, and we want to say okay. Now I would generally click on the negative one I want just in case anything changes in this problem. You don't really have to because we're using all positive numbers here. And then for these total ratios where you're doing all of them as a percentage, you can highlight all of those cells at one time and do home, format cells, and now we're going to click on percentage over here in this category. So it's the first time we've used percentages, but you want to click on percentage and you want 2 decimal points. So percentage and 2 decimal points, and then click OK. And all of these will change into percentages and 2 decimal points. So that's the requirements that I ask of you, is to replicate only what's here on the page. If you have any questions on this, of course, ask me in class, send me an email, come by the office, come by office hours, whatever you would like to do that would make you most comfortable. But I wanted to show you what the part of the problem, I only ask you to do through F, to think about F and calculate that information. I didn't ask you to do G, but I thought that I might like to show you what G looks like, the solution to G. So I want to come back over here, and you see, if we were going to do a 10% increase in operating expenses, we did this one other day, and I noticed that you had some trouble increasing a number by a percentage. But what you would be doing is you'd be notifying to the reader right here, this is where this increases. So if we were to click on this bar and look at home, then we would notice that it's bold, and I expected it to have a box all the way around it because it has a box around it. I expected it to have this border. I think it has this outside box around it rather than this thick box. But you can begin to see as you click on border, there's all of these borders, and this one here has this outside border activated on that. So that's how you get this look. I actually think it's a bit more complicated. It looks to me like you can see when I click out of it that that's just a thin box all the way around the edge saying it's a 10% increase. Now what they do is they copy all of this information from up above and paste it in down here. So they paste it all in so that it looks exactly the same, replicating everything. But now it says 10% increases in operating expenses. So here are operating expenses. And notice how they had to multiply that times 1.1 and multiply this one times 1.1 because those grew by 10%. And then all of that increase of operating expenses was on account. So the accounts payable here went from 20,000 for Bainbridge up to 48,000 because all of this increase in operating expenses, so the difference between the operating expenses of 285, which would be that cell number, and this cell number, all of that would be added over here to accounts payable. So you see 285 plus 200,000 up here because these had to increase. So, oh, that was 285 before, and so then this one will be the same way. So they're increasing these 285 plus 20,000, 34,500 plus 52,500. So when these operating expenses go up, these payables go up a great deal. Then what begins to happen is you do end up with some negative numbers in here, and these ratios are far less healthy. In fact, Chris's ratios, if their operating expenses go up only by 10%, which might not be very much in any one year, 10%, and it's all on account, then some of these ratios become negative, especially the returns. Return on sales, return on assets, and return on equity. And that's because the income is a loss, and so all of these returns would have to be zero. And some of these ratios of debt to assets, current ratios, are way off from their expected values or the values we would be looking for. These are dangerously different. So I just wanted you to see how it would be done. I asked you to do this once already in another problem, and I let you replicate it. I had you change just the two formulas, this one times 10%, this one times 10%, then these two, the old amount plus the difference between those, and the old amount plus the difference. And then because we had copied everything and pasted it in, these were automatically calculated for us. But that's not what I'm asking you to do. I'm not asking you to do that extra part down there. I'm only asking you to prepare this statement, this spreadsheet, and do it above this 10%. What you're seeing, what I'm showing you is the 10% increase line. So yours should look just like this when it's finished. I thank you for working with me. I've been talking for almost 40 minutes already about this one Excel problem. And it might take you that long or a little longer depending upon how fast you are at typing and how good you are at clicking on the Excel instructions. But this is all given to you in the book. You just have to recreate it. And I've told you that you want to use Appendix C to know the particulars on these ratios. And you want to make sure that all these ratios are in cell formula format. All right, thank you for listening, and this is my closing YouTube for today. So thank you for working with me, and I'll see you next week.